Hello viewers, this is weekly forecast for July 6th to 10th. You're watching Forex Flow Weekly Analysis. Be sure to subscribe to this channel and hit the bell icon so you can continue to get these videos. Here on the screen we are looking at EURUSD. So with this candle we ended the last week and we were saying the price should be heading downward if it breaks below this moving average, and if it does not, then if it bounces up, then we have to wait for the price to break above this orange line here, 113.51. And if it breaks above that or close above this, then we'll be looking forward to a buy position and wait for the price to go up to 114 or 115 in the long run. But here what we have noticed that nothing has happened this week. The price didn't do much here. It didn't go up or down, it just fluctuate between 40-50 pips up or down. It looks like it is stuck between this triangle right now, so that's why I put these lines here for your reference, that the price is now trapped within this rectangle, and every time you see the price goes up here, in the past it was going up to this orange line, it was getting rejected, and it was coming down to this orange line here around 111.80 or 111.75, and it was getting some sort of bounce and it was going up again. But now here we have seen that last week that the price has not gone up to this orange line, rather it has made a small move up or down, and it looks like it's trapped within this triangle right now. What's there for the coming week? Last week we have seen the price didn't do much and it was short week. July 3rd was actually a holiday in the US. Let's say Monday and Tuesday it goes up or down like this. My expectation is that the price, if it breaks out of this triangle, then it's going to be either rejected from this orange line here around 113.50. If it breaks below, then it should get support around this area around 111.80, along with this 50-day moving average catching up with the price. So price should be getting some sort of support and buying pressure around this area. In the coming week, we'll also be looking at the US dollar index to see if it goes up or not. Last week we have noticed that it got a lot of buying pressure and it started moving up, but it was not a very strong hammer that we can say now the US index is going up. In that case, this pair Euro USD would be going down as USD would be becoming more stronger. But again, it looks like, if you look at here for last couple of weeks, you will notice that there is a lot of buying pressure around this area between 111.50 and 112. So I would say if you have not taken a position, just be patient, wait and watch this pair where it goes. Our goal is to avoid entering into a position while this price is trapped within this range. If you have taken a sell position based on my forecast last time, you can either close your position or lock your profits. If you have not taken a buy position yet, I would say wait in the coming week and let the price break out of this triangle first, and then we'll see. Again, the target is if the price breaks above here with a strong green candle and it goes up and close above this area around 113.50, then you can certainly enter into a buy trade and take a long-term buy position, wait for the price to head upward to 114, 115 in the long run. If the price breaks below here, then we'll be looking forward to this 50-day moving average. The price should break below this before you can enter into a sell trade. I would not recommend anybody to take a sell position here and then the price bounces here from this 50-day moving average. So be patient, wait for the price to break out and then take your position accordingly. That's for Euro USD. Now we are looking at Pound USD here. Again, same thing. The price was expected to go up because it had reached here around this area 122, and we were saying that for last 2 to 3 weeks I've been saying that the price is going to fluctuate between this range around 122 to 128, and that's exactly what we have seen here. So if you had taken a buy position here, you would have noticed that the price has actually broken above this 50-day moving average. Now it's sitting right above here, but it's getting rejected from this middle Bollinger Band. So we'll see how the price goes. Maybe it can go sideways a little bit for a couple of days and then it can go up here. In the current situation right now, if you have taken a buy position, I would say lock your profits and play with the small position, because the volatility can easily trigger your stop loss, and unless you lock your profit and make sure that each trade is giving you a small profit. If you're looking for huge profits, then you have to make sure that you enter at the bottom and not in the middle. Right now you see the RSI is currently around 52 53, level. So this is not the right area to take a buy or sell position unless you enter around here. When you see here the price is RSI is around 80, or when the RSI is here around 30 or below, those are the areas where you can take big positions. But here when the price is making small moves and RSI is setting in the middle, then you have to be careful, take small positions and take small profits. So here we'll be expecting the price to go up in the coming week. If it breaks below this 50-day moving average, then I would say immediately close your positions, buy positions, take your profit, and then in that case the price should be heading downward, because this is a downward channel. If you look at the price has been going up and down here. So like here we have seen the price has been going up and down. It has gone up here a little bit. It can dip down further here as well. So in the coming week we'll be watching it very closely, and we'll have to make sure that the price continues to stay above this 50-day moving average. If you see any sign of weakness and you see the price is breaking below, then that could be an indication that the price may be heading downward. And we'll be watching closely the RSI. If the RSI hits around 30 or below, then we can take a buy position here as well, as we know that there is a strong support here around 120 to 121. So in that area you can take a long-term position. But if the price continues to go up and you are holder of a buy position, you can hold and lock your profit and wait for the price to go up here to the top of this Bollinger Band here. It's currently sitting at 127.50, and that would be the target where you want to close your trades. That's for pound USD. Now we're looking at USD CAD. Here we were saying that the price will act accordingly with the oil price, and as we know that the oil price was doing very little, although it has gone back up to 40 and closed above 40, a little bit above 40, and that's where we have seen that this pair the price is heading downward, because Canadian dollar is getting stronger against USD. Since last 2 weeks you can see that the price has been fluctuating between 135.50 to 137, and it's really not sure exactly which way it's going. It's just going sideways. So in that case this pair is not a good trade setup. So in the coming week I would say stay away from it unless you see there is a huge action on oil, and we'll be looking at that in a minute. But if the oil price breaks above 40, then this pair can go back here to 133 in the long run, and then we can re-evaluate it to see where the price will be going. Also you can notice that there is a price rejection continuously happening since the price has broken below this 50-day moving average. So there is a very little chance that the price will break above that, as we have seen recent price rejection here last week from this 50-day moving average. So in the coming week, if the price goes up a little bit to 136, 136.50, you can still expect the price to be rejected unless you see a huge jump in the oil price, and then in that case it can dip down. That's for USD CAD. Now we're looking at gold. Our expectation was that the price closed here last week with this hammer, and our expectation was that the price will go up here and reach to this top of this Bollinger Band, which is currently sitting close to 1800, and that's exactly what we have seen here. The price has gone slowly, it has gone up here to 1790. That was the top of this candle. So if you were a buyer, when I gave signal 2 weeks ago here to enter into a buy trade, if you were a holder of the position, you could close your trades here around this area, because that was our target, 1800. But in the coming week we have to see how the price goes. Let's look at the weekly chart and see how the price is going to act. So if you look at here, our expectation was that this was a huge green candle, very strong green candle with a lot of buying pressure. Then the next week we had strong hammer on the weekly candle, and then we have this green candle. So this is a very bullish indication. So it looks like the traders are undecided here, although the opportunities are opening up in other currencies and stock and commodities, so people can take money out here and then invest into those currencies. So this can drop immediately. But in the coming week I would say, since the RSI is very high, it may be still in bullish trend, so you can expect another green candle here up to 1800 or a little bit higher to 1820. If that does not happen, then you can expect the price to dip down here to this orange line on the daily chart. If you look at, it's going to come down here to get some support here around 1750. Currently it's sitting at 1775. it can dip down here. If you see it's bouncing from here, from this orange line with this 20-day moving average coming up, in that case you can take a buy position and then wait for the price to go up here to 1800 with extension to 1850. If it breaks below this orange line along with this 20-day moving average, then that means there will be a lot of selling pressure come in from the top, and then in that case the price can break below 1750. It can go down initially to 1700. If it gets support here with 50-day moving average, then we have to re-evaluate this pair, but if it breaks below that, then we'll see if the price goes back down here to 1650. If you are a holder of a buy position, lock your profits, wait for the price to go up. If you are looking for a sell position, then wait for a red candle here, inverted hammer on the daily chart, and then you can enter into a sell trade. In that case you can hold it and wait for the price to go down here to 1750 with extension to 1700. Now we're looking at crude oil. Here again we have not seen much activity. If you look at this daily chart, you would notice that the price is just lingering around this area, around $37.50 to $40. So this is really not a good setup for entering into a long-term trade for the August contract. Again, if we look back here on the weekly chart, as we were talking about that in the past, that this gap must be closed around $42 a barrel. So if you see on the weekly that it goes up here and close this gap, maybe go all the way up here to this 50-day moving average on the weekly chart around $43-44 a barrel. That is the area where you can close your buy trades and look for a sign of rejection. The price should be heading downward like a red candle or inverted hammer. On the daily chart, if you see, currently we have seen that the price has tested around this area around $41.80 or $42 a barrel. That's where the price has been rejected, so we have to watch carefully. If it breaks above that, then it can be bullish. It can go up to $43.50 to $44, or if it gets rejected from here, again like here, this small candle, if it gets rejected, then we'll have to see if there is an opportunity to enter into a sell trade. In that case, we'll be watching the selling pressure, and we'll see if there is a confirmation with one inverted hammer and then the next day there is another red candle. In that case, you can take a sell position and wait for the price come down here to this 50-day moving average, which is currently around $36 a barrel. With that, I'm going to close. Thank you for watching. Be sure to subscribe to this channel and leave your feedback in the comment section.